What's up, trader? So when we open our trading chart, especially in the beginning, we ask ourselves the most important question: where should I buy or where should I sell? Should I buy here or should I buy here? Or should I sell here or should I sell here? So these are the basic questions that we always ask ourselves as a beginner or even as an advanced trader. And to answer this question, to execute a trade, a trader must know technical analysis. And this is the most important tool as a retail trader we have, as the fundamental may not give us a short-term direction in the market. So with that being said, in this video, I'll teach you everything you need to know as a trader in terms of technical analysis, how you can map the market, how should you decide where to enter the market. Now this video is really important if you are beginning as a trader or even as an advanced trader but not understanding the technical analysis properly. So before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys and girls, so first thing in technical analysis you need to understand is candlestick. So what is a candlestick? Candlestick is the alphabet of the market. To read the market, you need to first learn to read the candlestick. So how do you read a candlestick? So first of all, let's find out what this candle mean. Now keep in mind that a candle is a visual representation of the buyers and sellers activities in the market. So let's assume that this candle represents a particular time period. For example, if this is a 1 hour candle, so what this candle mean that this is where the market open at the starting of the hour, and then as soon as market open, some sellers came in the market, they sold the market, push this price. This is the lowest possible price in that period of time, and the buyers push the price high, well above to this level. This is the highest possible price came to that hourly period, and at the end of the hour the price came here and the candle closed in this zone. So this is a what we call the bullish candle. Why bullish candle? Because when the price open at the starting of the hour, the price, let's say here 0.25, okay. Now when at the end of the hour, what happened? The price closed higher than its opening price. Probably it closed here, let's say at 3.5, okay, at 0.35. So the closing price is higher than the opening price. So that's what we call a bullish candle, because the buyers were in control in that period of time. So we call a bullish candle. Similarly, this is a bearish candle. The market, so once, say, let's say this candle close, as soon as this hourly candle close, there will be another hourly candle will start, 1 hour candle. Let's say the market open here. Now this time, once the market open, again the buyers push the price high to this level. This is the highest possible price, and then what happens? Sellers sold the market aggressively in that period of time. This is the lowest price possible. The sellers brought the price, and again the buyers pushed the price, and this is the end where the hour finished, hour ended, and the candle closed in this zone. So once the candle closed here, we have found a candle that we represent by red color, means that sellers were in control in that time period. Let's say the price closed, opened here with 0.35 as we have discussed, and then again in that period of time the price closed at 0.25. That means the lower than the opening price that we represent as a red candle. Now this is the basic representation of a candle. Now it could be different time period. It could be 4-hour candle, it could be daily candle, it could be 5 minutes, 1 minute, whatever time period you are looking at. A candle represents buyers and sellers orders or order flow in that period of time. So this is how you will read the candlestick. So now let's learn step 2 in your technical analysis. Okay guys and girls, so once you understand the candlestick, the next thing you need to understand in a market is who is in control in that market. Now always keep in mind, a market either will go up or down or in a sideway. There is no other way that a market can move. So to understand who is in control in the market, because either if you want to buy or sell, first thing you need to know whose market is this. So to know that, you need to understand either this market is going down or going up or moving in a sideway. So how do you know that? See, the only way you can understand a market is going up or coming down or in a sideway is from the market structure. Okay, always keep in mind. So how do you read a market structure? Okay, once you see a market, let's say this one, you saw, once you open the chart, you saw the market is like that. That's how the market moves. This is the language of the market. So if you see that a market is moving like that, going up, coming little bit, and going up again, coming little bit down, going up again, so that is what we call an uptrending market structure. So how do you know an uptrending market structure? The only way you know an uptrending market structure, when a market creates series of higher high. So what is a series of higher high? So once you saw that a market created high and then came down, that's how the market moves. The market will never move in one direction. And then there will be another move where the price will break the previous high. Okay, previous high will create a new higher high. So higher means higher than this previous high. And then will come back down again, will come back to the probably previous resistance, will act as a support, and will create another move where it will break the previous high. Okay, previous high will create a new high which is higher than the previous high, and at some point the price will come back again with the same level probably, or a bit different in practical, will test the previous resistance here as a support and will move another, again another push to the upside, will break the previous high. And that's how an uptrending market moves. So once you found this structure in the market, that is what we call an uptrending market structure. Okay, so why do you need to know a market is an uptrending market structure or any other market structure? Is because once you know that a market is in an uptrending market structure, you will be buying only in that market. Now let's see what is other market condition. Now if you see that a market is, rather than creating a higher high, it is creating a lower high and lower low. Let's say this one, you see a market dropped and then a retracement and another drop and a retracement. So once, first of all, it dropped, create a low, okay, and then pushed up, and again what happened, the market broke the previous low, okay, came to this zone, and then what we have seen, the price has gone up for retracement and have broken down again, broke the previous low. Okay, so every time the price was pushing, breaking the previous low, what is we call a downtrending market structure. Once you identify downtrending market structure like the uptrending market structure, we will be only thinking for selling in that market. So you found either market is going up or coming down. Now what is a sideways market? Is when you see that a market is neither going up nor coming down. Instead, a market is just moving in between a support and resistance. So what you call the support is when you see a market, let's say from this point, created this move to this zone and came back down here, okay, and again pushed up to the same level. And when the price came to the previous level, we saw that from the same zone, the sellers sold the market, pushed this level down, and we see that from the same zone, we could see the sellers selling again, pushing the price down to the same level of support and doing it back and forth. That is what we call a sideways market. Okay, so as I told you, the market will move either up, down, or in a sideways. So what you will do in a sideways market, if you see a sideways market, if it is a narrow sideways market, staying away from the market is always a good idea. If it is a big range, then we can trade that sideways market, buying from the level of support, selling from the level of resistance. So this top, what we call the resistance, okay, or a supply zone, and this bottom, what we call the support or a demand zone, where there is a buyer and there is sellers in this zone. And that's how we can identify the market structure. So once you found the market structure, then where can you buy? So the first question is, should I buy or sell? So you found either buy or sell. Now the next question comes is, where can I buy or where can I sell? Now once you identify the market structure, the next thing, let's say this is the market you found. I will show you in the real chart. First let me explain. Once you found this structure, uptrending market structure, the best way to enter a profitable trade is from the pullback. So what is a pullback? Let's say in an uptrending market structure, this long push to the upside is what we call a leg, an impulse, okay, what we call an impulse. So once you found the impulse, what we will be doing is we will be waiting for a pullback. So once the impulse is done, the market will do a slow retracement or a pullback. So in that pullback, in most cases, we could see that the market basically tested the previous resistance as a support here, okay, tested the previous resistance as a support, and we see the market is going up from here. So that means that when the pullback happened, the price retraced back to this previous swing high and turn as a support. And this is where, if we see market again, the buyers are buying from the candlestick pattern, this is where we will be entering a profitable trade in a uptrending market, profitable buy trade. Okay, so the next question is, where to buy is from the pullback in an uptrending market. If it is a downtrending market, similar way, we'll wait for this impulse. So this is the impulse, came down to this level, went to a retracement or a pullback to the upside. This is the previous support, turned, let's say like this, previous support turned as resistance. Once pullback is over, it will prepare for another impulse, and that time if we see here a strong drop, another candle that is giving us a selling opportunity, that is where we will be selling in that downtrending market. Okay, now the next thing is, when you see a sideways market, then what we will be doing, we will be waiting for a buy opportunity from the level of support, sell opportunity from the level of resistance, and that's how normally traders trade in the market. Now let me show you quite a few examples that what I told so far, so that you can implement in your real chart, in your trading. Okay guys and girls, so let's say you found this chart here. Okay, so you found this chart. Now you need to find out what should we do in this market. Okay, as I told you, the first question you need to ask is, whose market is this? Is this buyer's market or is this the seller's market? So once you, to answer this question, what you need to do is find out the market structure. So to do that, let's find out the market structure. You saw there is a big move down, and then followed by this upward move, and then another move, followed by this retracement, another move, followed by this retracement. So you see that the market is moving in this fashion. And if you take that out, what you see? You see that the price was basically what it is doing, creating a series of lower high, okay, and lower low, right? Every time the price was creating a series of lower high and lower low. That means that this is a downtrending market. So once you found a downtrending market, what's your job? We will be thinking for selling only. So once you saw that there is a impulse, this is the pullback, right? And again impulse, pullback, impulse, pullback. So the market is moving in this fashion, right? So if this is the case, then once you saw this impulse, what you need to do is wait for a pullback. This is the pullback, okay? This couple of candles, you have seen the price has created this move up. This is where the pullback. And as I told you, when you see a downtrending market structure move, you need to wait for the pullback, okay? In that pullback, what you saw that the price basically, you see this is the previous support here, okay? Previous support here, tested this support as a resistance with this long doji or a pin bar, and at the same time what we saw with this big bearish this candle, the price tested this previous support as a resistance multiple times, and we have seen a rejection, and this is where the selling zone is, because its previous support tested as a resistance. Now once you saw this move, let's say you sold it, now the market will do the same thing again. If you see that the price moved to this zone and once came here, you saw the price again pushed up, the buyers pushed the price high, okay? So where is the next place for selling? Is the previous support here. You can see that this is the support here, support here, support here. Now this same level acted as a resistance here and also acted as a resistance here, okay? Multiple times we have seen that previous support zone acted as a resistance in this downtrend, okay? This support acted as a resistance couple of times, we have seen multiple times retest, and then we have seen another move. So once you found the previous swing low, this low tested as a, this support tested as a resistance, this is where we will be entering a sell position. As I told you previously, if you just draw it again, so an impulse correction, impulse correction. So when you see this impulse, and in terms of correction, you need to see the previous support, okay, tested as a resistance, and that is where we will be entering. Not only in the test as a resistance, we need to see a rejection from this previous support zone as a resistance, and then we'll consider shorting Aussie dollar, or in that case we'll be considering selling from that zone with a price action confirmation. Let's say here you see this support tested as a resistance, and then we have seen a pin bar. If you sell, that could be a nice market, and again the same thing, and again the same thing, and we see after multiple tests we have seen the price now drop and continue to drop every time in the same manner. And that's how you will find out where to sell. And now when to sell is based on what kind of candle it is forming. So three questions, whose market is this, will determine either to sell or buy. If you see this is a seller's market, downtrend, we will be selling. Where to sell is previous support turning resistance, okay? Now when to sell will be answer if we see, let's say this one, okay, when we see a strong rejection, a candle, a bearish candle, a bullish candle, or any kind of price action based on your strategy, that is where you will be deciding when to enter or when to sell. Now let's see a couple of examples on other kind of market. Okay guys and girls, so let's look at this market here. The same thing we will be applying. You can see there is an impulse here, okay, and then correction, and then impulse. Correction means the pullback, and the pullback, and then we have seen another impulse, okay, up to here, and then we have seen a correction or a pullback, and then another impulse, correction, impulse, correction. So this is a typical, let's separate this one. You can see it's a typical uptrending market structure, creating a series of higher high, okay, and the higher low. Okay, so once you found a series of higher high, higher low, you know that this is a bull market. So in that bull market, we will be considering only buying in that market. So you found the buy or sell option. Now where to buy or sell? To do that, you need to find out the previous swing high. So this is the swing high. Let's draw a level here. Now this swing high, we need to see the price went above, came down to the same level of swing high, tested as a support, and from that support what we have seen, the price rejected. Okay, this is the zone for buyer. As we learned that when you see an impulse correction, we will be waiting for the previous resistance here to be tested as a support and create a price action, then we will be buying. So we saw that the price came to the same level and then created a very strong bullish. You see that with this long green candle, the price created a level where you can buy. This is a strong bullish candle, and this is where you will be entering the trade. And so what kind of market? Bull market. Buy. Where to buy? From here. And when to buy is when this candle will be closed as a bullish candle. This is when you will be buying. And the same thing repeated. You can see an impulse again in the correction. We see the previous resistance here tested as a support, and we see a bull market. So every time the price was creating a series of higher high and higher low and creating an uptrending market. So now let's look at a sideways market where you will be understanding how to buy or sell. Okay guys and girls, so let's look at this market here. You can see that the price was moving in this zone, but it's not going in fact anywhere. You can see a little bit of higher high created, but it's not in any kind of trending. You see this is a purely sideways market. Okay, so once you saw that the price has created this impulse and then came to the same level, almost went to the same zone. So the price is moving basically in the same level, creating a sideways market. So as I mentioned before, when you see a sideways market, how do you trade them? You need to find out level of support, okay, and the level of resistance. So once you found level of support, what you will be doing when you see that the price went to the resistance and then came back down from this zone, if you see a strong rejection to the upside, we will be buying. So that's how normally the traders made their decision when they see a sideways market. So you see that after this move, the price came to the same zone here, and from here with this red candle, you saw that there is a strong rejection. So this is a buying zone. Again, the same thing, the price came to the same level of support, even penetrated this level, created this big long bullish candle. Okay, and from this level of support, you can see after this big bullish candle, the price came down to the same level for retracement, and we saw that there is a big move happen, again came to the same level, and again move happened. So finally at some point this support is broken, as support or resistance will never persist forever. But once you identify a level of support, that will be considering only buying. When the price in a resistance like this one here, we will be considering only selling from this kind of zone. And that's how a trader make their decision based on they should buy or sell in a sideways market when they say the price is in the resistance and rejection, then only selling. So now let's look at another example of a channel. Okay, so let's look at USD CAD example. This is the perfect example of a channel. So the price, if you draw all this level of support and connect with a line, you can see that the price was moving in this channel for a very extended period of time. So what is the significance? You can see the price, first of all, from here created this big impulse, okay, and at some point you see multiple time test of this level, and then came back to this level, created a double bottom, and then again went to the same level, to this resistance, created a little bit of higher high, and then we have seen the price came to the same level of support, and again almost came to the same zone, came level. So this is moving, this is called a channel. Okay, so once you saw a price moving in a channel, this is an upward channel. So what we will be doing? Simple. When we will see the price at the level of this support of this channel and create a strong price action, we will be buying from this channel. Okay, and when the price came back to the resistance of this channel, once we see a clear price action, we'll be selling from this channel. And the same way we see the prices support rejecting, we'll be buying from this channel. Simple strategy, guys and girls, simple. Okay, as a beginner or even trading for some time, when you are trading on the channel, if you buy from the support with a proper stop loss and take profit and sell from the resistance, you will never lose money as a trader with proper risk management. So this is a simple understanding of channel is when you identify a channel, wait for the price to reach at the top, sell once you get clear signal, and buy at the support when you see a clear signal. And this is how you will do the technical analysis. You will make your trading decision based on what kind of market is this, who is in control, and where you can buy and sell in the market. I sincerely believe that this valuable lesson was helpful to you. If you find value in this lesson, then give a big thumbs up, and also don't forget to subscribe to the channel for more content like this, and also watch these 2 videos will help you in your trading. Thank you for watching. I'll see you soon in my next video.